Lux Algo just released a new trading view script called the Smart Money Concept. This concept is a fairly new yet widely used amongst price action traders looking to more accurately navigate liquidity and find more optimal points of interest in the market. So in this video, I will build a scalping strategy with this indicator that you can use today and make huge profits. I will also backtest it 100 times so that you can see all the important metrics behind it. The backtesting app I'm using is called Trader Edge and it's officially the best one out there. Thousands of traders around the world are using Trader Edge to get an edge in their competition. Trader Edge is 3 times faster than a traditional backtesting method. All you need to do really is to set your initial account size and the profit and loss per trade. Trader Edge will give you all the info you need about the strategy, such as the win ratio, the profit and loss, the maximum drawdown, and much more. By the way, the backtester is not the only feature they got on the website. They also got some other useful things like a position size calculator, which can be really handy for those who trade forex and commodities, the profit and loss calendar where you can track your trading performance and make some important notes, and the indicators and strategies menu. Here you can download some super accurate indicators for MT4 and TradingView platforms, and they've all been proven to work. If you're not entirely sure how to backtest, no worries. You will get a full step-by-step backtesting plan which has $100 value. If you're not sure how to build a profitable trading strategy, no problem. You will also get a full course on how to build a profitable mechanical trading strategy which has $270 value. And if you sign up right now, they'll also include 4 high-quality strategies that have $100 value. So that's around $500 worth of bonuses all for free, but only if you sign up right now. Trader Edge has a 7-day free trial, so there is literally no risk at all. So we'll go ahead and check it out. I will leave a link in the description below. Okay, so the strategy I'm about to show you works on all markets, including crypto, stocks, and forex. In terms of time frames, it works the best on a 5-minute chart. So in order to build this setup, we first need to click on the Indicators tab and search for the first indicator, which is called the Smart Money Concept. It's going to be this indicator by Lux Algo. This all-in-one indicator displays real-time market structure, order blocks, premium and discount zones, equal highs and lows, and much more, allowing traders to automatically mark up their charts with widely used price action methodologies. This indicator is similar to the fair value gap script, however, it does have much more features. As we can see, this tool prints different types of labels. So first of all, we have the CHOCH. This stands for change of character. This label is printed when the price action is changing its overall trend direction. The change of character can be bearish and bullish. So for example, the price action was moving in an uptrend, and then a strong bearish candlestick occurred that broke below the most recent level of support. This is definitely a sign that the trend is about to reverse. So the indicator printed a change of character label. When the price action is making equal lows and equal highs, the indicator will also spot that. This is very helpful because it indicates the range in market. The next very important label we need to know is the break of structure. Depending on the label's color, the break of structure can be bearish or bullish, and this is going to be our ultimate signal to enter a short or a long position. The break of structure is also an indication that the market continues to move in the same direction. So the indicator basically works like this. When the price action is making the first lower low, the change of character label will be printed. And every time the price action is making a new lower low, the break of structure label appears on a chart. We also have bullish and bearish fair value gaps. These levels can be used for support and resistance. They also can be used to eliminate a lot of potential losing trades. For example, the indicator spotted a bearish break of structure, which is a signal to go short. But if the entry price is very close to the level of support, the probability of the price action rejecting off of this level and hitting a stop loss is very high. Okay, now you know how this script works. Let's add 2 more indicators to the chart to complete the setup. So the first indicator we're gonna need is the EMA. We're gonna set its length at 200. And for the second indicator, we will need the volume spread for VSA. We're gonna leave its settings on default. Alright, now let's understand the exact rules for entering a trade. So here are the conditions for entering a short trade. First, the price action must be positioned below the 200 EMA. This is a strong indication that the market is in a downtrend. Second, the bearish break of structure label must be printed on a chart. As we already know, this happens when the price action is making a new lower low. Third, after the break of structure, a new bearish fair value gap must occur in the market. As we can see, the most recent bearish fair value gap is right on this candlestick. And the last condition is to have the volume spread for VSA colored in either yellow or red. This is an indication that the volume in the market is increased. So we're gonna go ahead and open a sell position at the close of this candlestick. The stop loss will be placed slightly above the fair value gap. The take profit target will be set at 1.5 times the risk. Here's another example for a sell position. We see the price action just closed below the EMA. The indicator issued a new sell signal. A new bearish fair value gap is present, and the volume is pretty high. We also seen that the profit target is at the most recent level of support. As long as it does not exceed it, we can still enter the position. Okay, now let's learn the conditions for entering long trades. First, the price action must be closed above the EMA. Second, the indicator must print a bullish break of structure label. This is a sign that the price action broke above the most recent swing high. Third, the indicator must also spot a new bullish fair value gap. And finally, at the time the price action makes a breakout, the volume in the market must be high. The stop loss will be set slightly below the most recent fair value gap. And the take profit target will stay the same. Here's another example for a long trade. We see the market just crossed above the EMA. The indicator printed a bullish break of structure label. A new bullish fair value gap has been identified. And at the time the price action forms a new higher high, the volume in the market is increased. We see there is just enough room for us to hit our take profit target. Okay traders, I hope you have understood the rules. If you have any questions, please write them down in the comments. Now let's do the backtesting to find all the metrics behind the strategy. So after 100 trades, the strategy has a win rate of 73%. This is definitely really high for a 5-minute scalping strategy. The profit and loss is crazy. We gained over 400% of profit on our account after 100 trades. The equity curve is fairly consistent, no serious drawdowns at all. The profit factor is 4.06 and we had 7 consecutive wins against 3 consecutive losses. So yeah, pretty impressive results. I absolutely recommend this strategy. Go ahead and test it out and see if you can improve it even more. By the way, if you want to learn how to combine the indicators in the best possible ways, check out this video right here.